Welcome to Trading Lounge and the European indices for Tuesday, October 5, and starting with the stock 50 here on the daily chart. We're looking at a pattern through all of the indices around the world as a WXY, and a WXY is a double zigzag, so it's 3 waves here, and then 3 waves for the X wave up there, and then another 3 waves to come into play like that. So far here we can look at 1, 2, 3, 4, 5 down here for wave A, and then we need wave B, and then we need wave C here for this. So let's have a look at that on the 4-hour chart and drill in. And most of the other markets, the European markets, are much the same in their own little way, except the FTSE slightly different. But so we can see clearly here we've got an A and a B and a C, so that's a single zigzag, and then this would be the double zigzag over here for this. Now, in a lot of cases, we've already got wave B in here, so we'll need to just keep an eye on that. We've either got, in this situation here, we've either got an A and a B and a C wave to come up here, and then we have 5 waves down, just to point this out. Or we've got this in play, and I'll just copy that. Or we've got wave B in place here, and we're going down for 1 and back for 2. So obviously if we were going to be going down for 1 here, then we'd only come back up 50 or 60%, and then we would go down again at that point. So with that in mind, let's just drill in a little bit further. So from the X wave here, we got 1, 2, 3, 4, 5 for the A wave, and yesterday we were looking for an A wave, a B wave and a C wave to come up to here, and then we'll look for our 5 waves down. But I know that with a lot of other markets around the world, this B wave here is already in place. So in terms, it's rather small, but in terms of timing, we may need to look at this as an impulse wave down. But I'm not going to rush into it because it doesn't look impulsive, the move down here. It looks like an A and a B and a C wave. But what we could do to mitigate this is that let's just say the market's come down, it's bounced a couple of times, so we'd need it to come under the level and then retest it. And then you can look to go short under that retest. So we have that bit of a retest, but that moved up through there. So let's just wait to see if we get another retest come through, it'll come back and check it, and then you can go short. That would be the safe trade. Otherwise, we're going to go up here further. Let's just have a look on the tick chart for this. Basically it's about this 4,000 becoming the support or the resistance, and taking your positions from that, from the front line there. From that's that. What do we need to do here? Press bring in a bit more data. So 1, 2, 3, 4, 5 down for the A wave, and this is what we were looking for yesterday. Bit of a stormy waters kind of thing on the 100 tick chart. Pop that there. Let's just check this a bit better. So what have we got here? Well, this can be played out as a little A wave here, B wave here, 1, 2, 3, 4. Don't really have the 5. I have to go that way with it. Okay, so that's basically that. So that needs to go there. I suppose that has to, but that's pulled back. It's too big for wave 4. I mean, normally I just put that there and look at this as the, maybe that's an impulse wave, and but yeah, right, okay, so that's got to go there. Then still, is this 5 waves down? That's the other question. What's that? That's made a new low below there, so it's not looking good. But we could look at this as a bit of a guessing game here. But that's, even if I got this wrong, it doesn't matter that much. So we could be looking at a rally coming up here. So we would need a C wave coming up here in 5 waves, and then then rolling over at that point. So that would bring this one over here, this one over here. So the other point here too, if this is just going to rally 50-60%, I mean, because this could be down for one, back for two, down for one, back for two, do you know what I mean? So that could be at that point, and that could be the end of it just here, and then we could drop from this point. So we need to be mindful of that. So I mean, if it was going to be a C wave going up there, it won't come back this far. So we can put our short trade here. So it doesn't matter. We'll either be clicked in or we won't. I know that's sort of here nor there, but you just got to take the next logical step and set yourself up for a win, you know. So yeah, I don't know exactly what's going to. I mean, in most cases, when I've been looking at the other indices, wave B is over here and we're good to go. But yeah, I just a bit unsure about that. I'll take that away. So really, if you see the 4,000 as the retested resistance, then you need to be to the downside, and you know what that looks like. This is the simple classic trading levels pattern, the variation. So if that's the 4,000, it comes down, bounces, bounces like a ball, drops through, goes back and retests. It's that low that you need to be mindful of, and that low, if the market pulls back up above the level, which in most cases it does, then you need to rework it over this side. These are still relevant, but if you're going to use these, I suggest come across and have a look at the price down the side here, and have a look at the closest largest number at that point, and work with that rather than that particular low. And yeah, this little tiny pattern in here, as simple as it is, it actually contains this bigger fractal in here. So that means that when this comes down to this point here, it'll be like that, bouncing back again. So it will come down, bounce back, drop through, retest. So you'll see it in there, but that's the setup for the short side. Let's have a look at the DAX, because it's pretty close to all of this. So the same thing again, we've got wave 3 here and wave 4 here. We've got an A, B, C for the W, the X, and then 1, 2, 3, 4, 5 for the A wave, and then we're looking for an A and a B and a C for the B wave yesterday. So will we get that rally there? That's the thing, because with the US like the NASDAQ, I've got that wave B sitting in there, you know. But it just looks a little bit small for that. We'll tidy that up a little bit, but we'll go in and we'll just have a bit of a look and see what we've got. But the beautiful thing here is we've got 15,000. So, you know, you wouldn't short it. I mean, this is the market's come down. It's had its first bounce. The second bounce is normally lower. So let's see, that could be, you know, it could certainly be down for one, back for two, coming back to these highs here, and then coming in for 3. We've either got that, or we have to go up there and then we go down at that point. Too many objects on the chart. Alrighty. Let's just move in a bit closer and have a look at this. This is where we were yesterday. Yeah, like I said, in the US videos, I've got that sitting over there, you know, so I just don't know if we're going to be making it all the way back up there. I mean, it doesn't look that impulsive. I mean, I can see that it's weak. That looks like it's probably a 1 and 2 and 3 and 4 in there, so it's probably 1 and 2 and 1 and 2. But otherwise an A and a B and a C. So I could be right, could be wrong. We're not quite sure, just not sure. But the same thing applies here if we want to be short below the level. But that means you need a little classic trading levels pattern in here for that. I don't think... I mean, that looks corrective to me. This is just the tick chart. What's Asia doing at the moment? It's open for an hour, it's coming down. Same as this, it's looking weak like that, so it's just mirroring. So I haven't updated this for ages, but that's okay. Not to worry, but what I can do is give myself a few credits here by taking those off, and that will give me some time to draw. So in a nutshell, this could be down, it looks like it's down for 1, back for 2, down for 1, back for 2. So if it comes down here, it's going to bounce off there again, and then it's going to go through, and it's at that point, that's the one that you want. Okay, so let's just have a quick look at the FTSE. So the FTSE is a little bit different. In that I think it started sort of much earlier over here, so it's kind of running a bit slow, a bit late here. But also too, no matter what the count is, we can't short it unless the 7,000 is the resistance, you know. So be very careful about that. So you see how it came through here last time. It came through, went back up and checked. Then that's where you short it under there, you know. Well, either there or under here. So that's what you need on that side. So let's just, where are we? 4 hour, 1 hour. This is what we were doing yesterday. We're in this space. I'll just clean up my mess here. So I'm left in the same situation. You know, I've got a funny feeling that the B wave is already in play. But I'm unsure. So what we want to do is we want to short under here. So you just have to, we're either going to move up to here and then go down, or we're going to come down here, bounce off that, go through there, retest it, and then go down. So it's not complicated, you know. The other thing that I wanted to do was just have a look at Sweden's market here. So this is a daily chart, and see OMX. So I'll just bring these out to here. So this one's for Stefan, and it's kind of interesting really, because I'm okay with this wave 1 and 2 to here. I'm good for this wave 1 and 2. I'm good with that, and I'm good with this wave 1 and 2. And then here we got a little 1, 2, 3, 4, 5 for 1 and 2 here. 1, 2, 3, 4, 5 here. So really, I mean, that even should go up one more there. So I'll double check that. And but the other interesting thing here is that we're not in this intermediate wave 3 here. It feels like that we're in minor wave 3, so it feels like, but I'll take the middle of the road situation, and that means that this wave 4 here, we can expect the market to come down to 2.2, maybe a tad lower, but that's the 38.2% retracement level from that low to that high. So I put all of that in the third wave there, which I probably shouldn't, which I'll need to just have another little look at. 1, 2, 3, 4. Yeah, it just seems that, unless that's 1, 2, 3, 4, 5. No, that's right. So really, it just seems that we should be putting this one. I feel like I'm pushing too far anyway, but it does feel like, I mean, I'll have to check it, but I'll do it anyway. It feels like this. Feels like that's there, but that's going to be too big for that, so that's not right. I think I've made a mistake somewhere, but I think at minimum we'll go with this. So I think that what I can say, Steph, is that we're running much the same pattern down here as the other markets, so you'll know when to buy, and the target to the upside will be the 2500, which will be a medium level, because that there is about the same size as that little dude in here, that one. If the extension's in wave 3 here, then that will be together at that point. So yeah, if you're looking at ETFs or whatever, then buying on that 2,200 and holding them until the 2,500. So yeah, some of the other markets like the DAX, we're counting this wave 3 here and this wave 4 here. But I know on the stock 50, I've also got this wave 4 on the stock 50. So I'll have to do some work. I've got a feeling in my gut that it's this here, and I wouldn't be surprised if that's the same on the S&P 500 and so on. But anyway, I always just take one step at a time. So the next step for this will be a nice bounce off the 2-2, and then a move up in 5 waves to the 2-5. So yeah, just in time for Yule, a nice Christmas present for you there. Alrighty, hi. I'll leave it at that. Cheers.